This is the world of business right now with Business Incorporated. I am both Cinema Faye and I welcome our viewers here and around the world. Coming up, markets in the Middle East see red, no thanks to Donald Trump's travel ban jitters. Kenya's central bank holds policy interest rates steady at 10%, plus Tunisia plans $500 million sukuk or Islamic bond to plug its budget deficit. Let's get started. And we're starting from the financial markets, stock markets precisely, and starting from the continent here in Africa. Nigeria and South Africa's stock exchanges, two of the continent's largest markets, were in the green at intraday trading, higher by 0.07% and 0.245% each, shaking off early weaknesses on both exchanges. However, the markets in Egypt fell due to the new U.S. Donald Trump's travel ban. In the meantime, the Nairobi All-Share Index was down on the day the Monetary Policy Committee of the Reserve Bank left its benchmark interest rate unchanged. That index was down almost 1% yesterday. We'll get to talk about the latest interest rate decision in Kenya down the rest of the programming. Let's move on to the Middle East, where we're heading towards the end of the trading day. The markets are down around the midday time in Nigeria, in line with global equities, after investor sentiments was soured by the travel ban ordered by the U.S. President Donald Trump. Look at the numbers there, all in red, with the Abu Dhabi almost 1% across the Dubai financial markets, the Qatar Stock Exchange, and of course the Saudi Tadawul market down about 0.75%. In Europe, investors are focusing on a slew of economic data and earnings on the street this Tuesday, while keeping one permanent eye on the new U.S. controversial immigration policy. Let's cross over to the Frankfurt Stock Exchange, where my colleague Christoph Kober, DW-TV for Channels Television, is standing by to join this conversation. Christoph, it's good to see you. Let's start the conversation from the reactions globally trailing President Trump's travel ban policy. Do you have an idea what the gainers and the losers list looks like for business and the markets in the new discussion?
Well, Bosun, the front of losers, or at least those corporations that feel they may negatively affected by Donald Trump's policy, is certainly growing. The latest corporation to speak out is carmaker Ford, a company that in recent weeks has made sure that it is in line with whatever Donald Trump has said. But now Ford has also voiced its criticism about the recent travel ban, and the criticism reaches across sectors of the U.S. economy. We have automakers, we have finance companies speaking out, industrial giant GE has voiced its criticism, and the loudest voices opposing this travel ban usually or regularly come from the tech industry, a sector which stands for an open, more global society, and that is something that this travel ban by Donald Trump certainly opposes. Well, and it's hard to pick a winner in all of this in such a tightly connected global economy. If I was supposed to pick a winner, I would probably say it may be oil, gas, and mining companies, those offering jobs that maybe don't need that much of skilled personnel, and a lot of people have lost their jobs in this sector, and Donald Trump has vowed to bring these jobs also by cutting down on regulation.
Well, let's get to the mainland Europe. And you look at a slew of economic data today, the Eurozone inflation data, inflation in Germany, in France, in Spain. In Spain, the headline inflation surged to about 3% year on year. General and core inflations are pointing to a continued decoupling of growth rates. However, unemployment within the Eurozone headed down about 9.3% reading as at this morning. So how are these reports being digested today by the markets?
Well, market reaction is somewhat subdued, as it is Donald Trump who is setting the agenda at financial markets in these days. But generally, I think we're looking at more of a sweet than bitterness here. We see growth having picked up in all of the Eurozone. We've seen robust growth in Germany at 1.9% in the last year. And we see good economic data coming out of France, where growth has also picked up in the fourth quarter somewhat. The year year-on-year economic growth fell short of government projections, but still, despite being high, unemployment is declining. In France, unemployment in the Eurozone as a whole has hit a 7-year low, and we've seen inflation go up to 1.8% in the Eurozone, which is just below the target of the European Central Bank.
Yeah, it looks like the market is digesting that and taking it in a stride. But let's get a bit more specific with one major company news. Germany's largest lender, Deutsche Bank, is in the news again, this time on fresh penalties from the UK financial authorities. How will these penalties eventually, do you think Deutsche Bank could at some point be hobbled by this, or Deutsche Bank would ride the crest of these penalties like Volkswagen and continue beating Toyota? Do you think things will play out very nicely or otherwise for Deutsche Bank?
Well, a penalty of $630 million, I mean, that is quite a price tag, a combined penalty having to be paid to US and UK authorities. In fact, UK regulators say their $200 million part of the fine is the biggest to ever be imposed by regulators on anti-money laundering violations. Now, Deutsche is said to have helped its customers to get about $10 billion out of Russia using so-called mirror trades, meaning that stocks have been bought in Moscow only to be sold shortly after in London or New York, thereby disguising the origin of the money. Now, despite this hefty price tag, Deutsche is probably pretty glad that it is over now, this case. You have the penalty that has been paid, and it is one of the many legal entanglements that is Deutsche is suffering from, is now done with, and that is certainly something that Deutsche Bank CEO John Crying has as one of his prime objectives, and we see investors here also seeing this as a good thing. The Deutsche Bank stock is up about 2%.
Amazing, amazing. So let's just put it behind us, shall we? Okay, do have a great afternoon. Christoph Kober from the Frankfurt Stock Exchange, the DW-TV for Channels Television, the financial correspondent. Let's get on to Wall Street, where we're tracking the open on Tuesday. All the key major indices of the Dow futures, the S&P 500 and the NASDAQ futures, all in the red. The numbers pointing to a lower kickoff of the Tuesday trading day as traders continue to digest President Donald